even before the COVID started, Kuwait has had high uptake potential for digitization. Why? Because of two things or three things. One is the Kuwait demographics. 62% of the population in Kuwait is below 30 years. If you look at the millennials, the age between 23 and 38 years of age, 25%, they represent around 25% of the population. Even Generation Z is 30% of the population. That's the age between 7 and 22. So this was helping basically and supportive even before the COVID for people to really use digitization. In fact, if you look at some numbers of digitization, 97% internet penetration is in Kuwait, is one of the highest in the world. If you look at payment aggregators like MyFatura, Tap, and One Global, they are gaining market share in the region, in territories like Saudi Arabia and Bahrain. The numbers are very impressive. Now, this is before the COVID even. During the COVID, Kuwait saw a very significant uptake in mobile and internet banking, especially day-to-day transactions. We have seen adoptions by consumers almost fivefold. E-commerce spend has increased, multiplied. First-time users and repeat users. Electronic payments have also thrived. Card and contactless, displacing cash. Merchants were forced basically and the major retailers have had no choice, but to focus on online to replace dwindling face-to-face or in-store businesses. I'll give you an example. For example, in Ahli Bank of Kuwait, we saw in 2020 versus 2019, 73% increase in online domestic transactions. We have seen a 30% increase in new mobile banking, 35% increase in online transfers. You'll be surprised. We've seen 800% growth from a low base, yes, but a growth in ABK Pay services, which offers customers, for example, the ability to request payments using WhatsApp and SMS. Even during 2020, we did not stop. For example, Al Ahli Bank launched tokenization payment services where customers could really use their debit or credit or prepaid cards through smart devices like Samsung, Fitbit, Garmin Pay wallet to pay at point of sales. So I expect overall, if I have to sum it up, digitalization levels achieved during the pandemic will stay with us. So I'm very positive. Kuwait was ready before the COVID. The regulations are helping, definitely. The central bank is paving the way, is pushing in this direction. The digital vertical in banking is being pushed by the central bank. The banks know that they move. Demographics are in the right place, and digitization usage is in the right place as well to move ahead. Theoretically speaking, I mean, the core drivers of consolidation between banks are maybe many, but the most important ones are basically achieving bigger banks with increased economies of scale, especially in the same sectors, in order, for example, to fund mega government projects. That's one reason. The other is the possibility of to increase economies of scope, and that's across sectors, to provide wider spectrum of products, for example. Or when banks are under earning pressure. I mean, there is a tendency for banks usually to come together. Or when you have an overbanked population, then I mean, it makes sense basically to merge and to consolidate. While consolidation creates efficiency in general, the integration and the cultural challenges that consolidation faces cannot be ignored at all. And if you talk about society, I mean, one should strike really a balance between having lots of choices for the clients and product variety versus lower cost. You don't want to create like big, huge institutions where there will be basically monopoly of prices. I mean, going forward, the way I see in Kuwait or in the GCC, banks taking steps in two directions. The first direction is to acquiring or actively partnering with technology and digital companies like fintechs and payment startups. And the second is adding capabilities to the bank through, for example, new segments or products offerings, for example, trade finance with partnerships, etc. But definitely, Kuwait is behind the GCC, and it's a thing that we need to really look at possibly and wait what will happen. Governance and environmental issues in the ESG is definitely has been the focus in the last few years. I think more so after the COVID. I think the social element will become more prevalent going forward due to the COVID. In the region, there were some also green sukuk certificates issued by, for example, Saudi Electricity, 1.3 billion issued in 2020. So the region is moving in this direction. And again, most of the investors, according to some surveys, okay, at least 3/4 of the investors expect greater pressure on ECG and their strategy post-COVID. So overall, yes, this is gaining prevalence, and companies should adhere to going forward more so towards the social element of the ESG. We all agree that, I mean, definitely SMEs is very important for spurring growth and for creating employment. This is where economies improve. Yes, if you look at the companies in Kuwait, in numbers, 85% of the 85%, more than 85% of the registered companies in Kuwait are considered SMEs with turnover of less than 2 million or FTEs of less than 20. There is something like a conundrum or a dilemma here. Kuwait, in one sense, boasts a rising startup scene supported by local corporates. However, and also in 2020, for example, Kuwait ranked the fourth amongst Middle East countries after UAE, Egypt, and Saudi Arabia in startup funding. However, the total bank funding remains, okay, for SMEs less than 5%. There is room for growth, definitely. It goes without saying. And within the 2035 vision of diversification of the economy, SMEs, I mean, is a critical element. If you look at it in numbers, yes, we have lots of SMEs, okay, around 35,000 companies that are considered SMEs. But the contribution of SMEs to non-oil GDP in Kuwait falls short compared to, for example, other GCC countries. While it only offers or contributes only 6% in Kuwait to non-oil GDP, in Saudi Arabia it's 33%, in Bahrain it's 35%, in UAE it's 80%. If you look at the Western world, in Europe is around circa 50%. The contribution of SMEs so far in Kuwait to total employment also falls short or is below par. Kuwait is only 23% compared to Saudi Arabia of 60%. So those numbers indicate that there is room, okay, for KSA, provided, as Ali said, the regulations are there. The dilemma I'm trying to allude to is basically, on one hand, the Kuwaiti entrepreneurship is there, but Kuwait ranking on the ease of doing business is not very impressive at all. Let's face it. So there is lots to be done in this front and on many fronts.